Well, hey everyone, how's it going? Thank you for joining us today. This is the DeFinity Markets Community Updates and AMA with the team. Everyone say hello, Dashi. Hello, Dashi. So it is so nice to have the DeFinity team here today. It's been a little while. It's been a couple months since we've done it. This is the first one this year. And shout out to my co-host Crypto Rain for joining us today. He's been a little under the weather, but he's getting this bread for this interview here. And it's been a few months since the last time we did this. And the last time since then, you guys have been a bit scarce from the Telegram chat. Now, obviously, some people could interpret that as, oh man, are they, what are they doing? They're not communicating. But a lot of people will also interpret that as they're working, they're busy, they're getting that bread. Can you tell us a little bit about what's changed since the last time you've been here and right now?
Yeah, sure. So look, I think when we last spoke, probably when was it? Was it back in last year? Might have been actually. Or was it? Yeah, I think it was. Yeah.
Yeah, we had a couple of AMAs in December. Yeah.
Yeah, no, we did. So look, just being very, very open, very transparent with you. So look, what essentially has happened is that unfortunately one of the co-founders became reasonably unwell last year, and that condition has become worse. And effectively, what's happened in that period is that essentially they decided that they want to exit the business, which is, again, it's a sad thing, it's a shame, but it's, I think, for the better of their own health. So I think it's probably the right thing to do. Obviously, what that's done suddenly is meant that all of us have had a role, not just doing the front office stuff, but certainly doing middle office and back office, i.e. the operations role at the same time. So it's basically created a bit of a scaling issue. So the reason we've been so busy is we've been working twice as hard just to keep everything on the same kind of even keel. So it's taken us a little bit of time to balance the ship and stabilize things. We've made a couple of hires. There's a couple of new people joining us, which will help to, I think, put us back to where we were at the back end of last year. So we have been treading water the last couple of months as we remedy this small issue. But again, look, it's like anything. We didn't expect this to happen. It did. We've dealt with it. From a client perspective, clients are still happy. They're still trading with us. We're still doing volume. We're still generating revenue, and we're still generating profit. So that's kind of the reason, the rationale for why we haven't been quite as present as we had been. The other thing that we also have been doing is we have been traveling a little bit as well. So we obviously, since the Trump victory, we've decided that we need to target the US a little bit more aggressively. And one of the things that we realized was there seems to be this massive aversion in the US to SWIFT payments. Everyone wants ACH or FedWire. So we then had to go to the States, create essentially local entities, and then get accounts up and running, which we've now done. So I think what this is going to do is this is probably going to help us to double revenue in the next, I don't know, maybe the next month or two. So it's going to be very, very positive.
So can I clarify on that? So the change in the U.S. administration has meant that and the change in the SEC has meant a much more, I guess, pro-environment for crypto. And so all of a sudden, all the U.S. companies that you would normally have been able to target were reluctant to participate in what you were doing. And now that reluctance is mostly dissipated. Is that what you're saying?
No, it's actually the other way around. We were reluctant to deal with them. We just didn't want to do business. I mean, look, if we had existing clients that were in the US, and look, the problem with the US is it's the biggest market. Everyone wants to get in there, but you've got to be very careful, because if you're the wrong side of legislation, it does not end well for you. So we were very anxious, very nervous doing anything with any new clients. So we did not have any regard for scaling the US operation. Given the Trump victory, suddenly we were getting phone calls from our existing clients saying, look, we want to introduce you to a couple other people that have been desperate to speak to you, but they haven't because you just won't take new clients. What's your view? So eventually, we kind of sat down, had a board meeting, and said, okay, why don't we do this on a referral basis only? We won't actively seek clients, but if there's an existing demographic of people that are using our service, they're happy, and they want to introduce other people, absolutely cool. And that's what's happened. And it's been very, very positive. So we spent a bit of time in Miami, met some of our existing clients. They've introduced another half a dozen new clients. So yeah, I think we are missing a trick by not focusing more on the US. But by virtue of having local accounts in the US, we can now take receipt of fiat using local rails. And I think that's going to be a bit of a game changer. So, and again, look, we have had a lot of pushback about sending SWIFT payments. Again, I'm still confused why that's a problem in the US, but it seems to be a major issue. But now we've fixed it, we should be able to I think, grow very aggressively.
Speaking of that growth, Last time you obviously have the banking model, and you had that successful test with crypto repo. You have gaming repo that's going on. Can you give us a little bit, outside of the new customer acquisitions, can you give us a little update on how those things are going and when the company might start receiving revenue from those?
Yeah, sure. So look, obviously we had a test case that was in Texas that went very well. Again, it was, we're not talking huge volumes, we're not talking huge amounts, but it was testing the principle and getting the regulators happy, and they're absolutely delighted with the way it's progressed. There is another state whose name I cannot mention. I'm sure you can guess who this may be. That is a bit of a mover and shaker in the gaming industry. That is still being worked on in the background. We're still doing the beta testing. Once that is approved, this becomes very, very powerful. And I think we can then really begin to start scaling this. So at the moment, it's really just demonstrating how the process works. So from the regulator's perspective, their biggest concern, their biggest headache is, how does this work? If I'm a random person, it's 4 a.m. and I've had half a bottle of Jack Daniels, is this suitable? Now, the answer is obviously not. So the way that this is done is that you have to say, well, yeah, apparently it's not cool. So the way this is done is they have to obviously onboard, do the KYC, and prove ownership and the source of the digital assets 24, 40 hours beforehand. And then they can go in and they can use the assets available for sale to get a liquidity facility via Every in a local casino. So it's a very neat idea. It's being tested quite aggressively in terms of how many people can you onboard. And again, what we've done is in the initial phase for expansion, it's going to be limited to high net worths and ultra high net worths. Because again, from a reputation perspective, we want to make sure that this is nothing more than people that have excess capital and they just want to access liquidity using digital assets. That's it. They're not trying to win back their home or something, which is not so cool.
So you've seen, I was wondering, specifically, you've kind of alluded to it. Have you felt a complete shift in the industry with Gary Gensler at the SEC out in the new tone from the current SEC under crypto or towards crypto?
Yeah, no, we have. I mean, look, there's still a lot of anxiety, and there's still a lot of concern because look, the one thing that Gensler was asked for over and over again was clarity, and he never gave any. And we still don't have the clarity. All we know is that they're pushing very hard to make sure that the US dominates the digital asset market, which is a great thing. The way in which we felt this more than anything else is obviously we've spoken to a lot of US banks, and apart from JP and Goldman's that will do whatever they do behind the scenes and not tell anyone, all the other banks were just waiting for the change of guard. Now that's happened. They are looking at investing a lot of time and effort in this and suddenly hiring quite a lot of people to assess existing businesses. So I think what's probably going to happen is that they're probably going to look at Europe and say, wow, there's now a dozen European banks that have got crypto traders sat at their trading floors. Again, this is not public information, but we have zero. There's a whole bunch of tech companies that are based in Europe that are doing this already. We can do one or two things. We can either hire a bunch of guys from McKinsey to try and build this model for us, or we can try and work with these guys collaboratively, maybe acquire one of these fintechs, which is probably the route they're going to take. That's usually how they operate. So they're playing catch up now, and they I think will be very aggressive in the next 12, 18 months. I think there's going to be a lot of M&A activity.
Yeah, it'll be interesting to see. We haven't had a lot of mergers and acquisitions through crypto, but I think this is going to be the year for it this coming year.
I think so. I think it's going to be a very, very big year. Now, look, having said that, I've got to caveat this with one of the things I was a little bit upset about was the slight, shall we say, what's the euphemism? The slight rug pull with the Trump coin. I don't know what that was about. That was not ideal. And taking out liquidity, give it to the Melania coin. Yeah, I was a little bit shocked that happened. So that took some of the fun and the joy out of what was happening. But notwithstanding that, let's just call that a minor indiscretion. I think the attitude has definitely changed, and people are far more open to looking at this, to actually recognizing this as a proper asset class. And I think that's a game changer. So that's only positive. And what I find really interesting is that at the moment you have this huge amount of fear and panic and concern within the retail investors. But obviously we're speaking to the institutions, we're speaking to the banks. I've never seen them more positive and more bullish in my life. So you have this weird dichotomy where you have retail quite worried, and I look at the institutional guys and I look at the banks, and it's like, these guys are going to start buying in size. You know, it may not be tomorrow or the month after, or maybe in 6 months. I don't know. But when they do, Jesus Christ, you're going to see it. You're going to notice it.
Yeah. it's funny having a conversation. A lot of the YouTube audience are what we would call retail people, right? They're just people looking to invest in crypto, and they're wondering whether they should be bullish. And it's like the institutional players are moving forward like with freight trains worth of money and trying to get the railways done so that they can really get into this. And the retail people being scared, it's like, no, now is not the time to be scared. It is the right things are setting up that this is going to be crazy.
Absolutely. No, it is. And I think, one thing I've noticed is when you really start to look under the hood of what is available and the scale of the opportunity, it is so much bigger than even I thought. It really is. I think there's and in fact, speaking to existing clients, we've actually come up with one or two other ideas that have just evolved through these conversations. Again, in the same way we've done with pretty much everything we've looked at previously, we've kind of said, look, what are your pain points? What are the issues you're facing? And with one or two of them, we've kind of sat down, Chris and I, and we've gone through this and said, you know what, I think we can fix this by doing the following. So we then gone back and said, look, if this was a solution, would it be of value? Would it be of interest? And would you be willing to pay for it? And the invariable answer usually comes back as being yes. So, and again, we're kind of heavily NDA'd with some of the stuff we're working on, but we will come back hopefully very soon and explain this in a bit more detail. But the net impact this will have will be absolutely phenomenal. On the business and also the adding more utility to the token as well, which I think is quite important.
There's a company called TradFi Tomorrow, which had just released a report stating that more than 2/3 of TradFi firms are currently looking at DeFi. And if you take a look at what the FDIC just said, they said that banks can now engage in crypto activities without prior approval. Because a lot of what helped people gear towards you guys was because you had those relationships, you were able to do things in a compliant way, MDL A5 compliant. Is this news bullish or bearish for you guys? Bearish because, hey, now anyone can seem to engage in crypto, or bullish because now it opens up the field?
I mean, look, I think, Chris, you probably know more about this than I do, given the conversations you're having with various regulators and what have you. But look, my 2 cents in this is I think it's never a bad thing when you get the blessing of someone like the FDIC to actually engage in conversation. I don't think anything bad can happen from this. But what I've noticed is that there is such a fundamental lack of understanding, and there is such a knowledge gap within these banks that they're pursuing things that, if you really think about them, don't make any sense. And I'll give you, for instance, every single person I speak to that is new to digital assets from TradFi, the first thing they say is, we're going to look at tokenizing money market funds. And my response is, every time we speak to the guys at USDC, I always call them an illegal money market fund because they don't pay a coupon. But they don't seem to have the ability to connect the dots to say, wait, so USDC is basically a money market fund that's already tokenized, but it doesn't pay a coupon. Yes, they don't understand this. So they're going down these various rabbit holes trying to pursue what they believe is a vision of the future. And eventually what happens, they eventually come back to us and say, yeah, you were probably correct. That was probably not the right thing to be doing. So the same way that we saw a whole bunch of people looking like MasterCard and Visa to tokenize deposits as a means of payment, and we were like, this is really stupid. Why don't you just have a bank issued stablecoin with your assets at the central bank? And they were like, that's a terrible idea. And here we are, 12 months later, they've all come back saying, yeah, we're looking to pursue a bank issued stablecoin with our assets at the central bank. So this is the kind of thing we see over and over. And Chris, sorry, you've got more experience than I have with this, I guess.
Yeah, I mean, what's encouraging is that although some of the ideas aren't on point because people don't really understand the structure yet of how crypto and blockchain works and how it applies to TradFi, but what is encouraging is they're trying to find, albeit sometimes going down the wrong path, they are trying to find solutions to move things forward. So it's not like they're sort of having hypothetical conversations. Tokenized money markets and bank deposits are just another way of them trying to find a sort of fiat equivalent that exists on the blockchain to enable them to settle the cash leg against other digital assets. So the fact that they're even looking for these solutions just says they're ready to start doing things, and they're not waiting for some of the longer term solutions like maybe bank issued stable coins or wholesale CBDC to come through, because they're going to be slower projects. They might never happen. I saw a man who's smiling there because he likes the concept of CBDC. But some of the solutions that the banks are talking about now are long term slightly flawed, but short term, they could be tactical fixes just to accelerate the market. So it's positive both for us and for the broader market. And I think, because we are a venue for digital asset exchange, then from that point of view, the more people create digital assets, we've got that regulatory compliant venue. So whether it's Bitcoin, whether it's a tokenized money market fund, whatever it is, it's kind of irrelevant. If institutions are trading amongst each other and it's a digital asset, then we can allow it access as long as it ticks all the regulatory boxes. So yeah, in short, very positive, I think, these conversations, even though some of them will probably burn out. It just shows a willingness on an industry scale to get this moving quickly.
All right, I'll take that. Right.
So DeFi has been solidly out of the crypto narrative since March or April of 2021. Do you see the right thing setting up for a comeback with this idea of people taking control of their own finances? Again, the idea of DeFi really having a resurgence and being one of the main crypto narratives again.
Yeah, look, I think the issue is that I'm a big fan of DeFi. I am an anarchist at heart. I have nothing but shall we say less than love for governments. So I think you have to be in control of your own destiny. Otherwise, you will be taken for a ride, probably by your own local government, right? But the issue you have is this: fundamentally, the whole concept of DeFi creates a regulatory nightmare because you're talking about cross-border regulation, and it's impossible to actually regulate. So that the issue you have is that I can almost see there being maybe a bit of a hybrid, which I think takes away from the essence of DeFi, where you have, shall we call them trusted intermediaries, aka banks, that will be having a quasi CeFi version of digital assets. I think that's step one. When we see mass adoption of that, is there scope for DeFi? I'm not sure. It depends on the appetite of the regulator, and that's the bit I don't know. It's difficult to say.
It was one of the first questions that the FCA asked: is how do you regulate DeFi? And
you can't.
Yeah, you can't. That's the point of it. It doesn't really exist in any centralized place, so therefore you can't regulate it. But one of the conclusions that we guided them towards was also about education, and where the trusted intermediary, as Manu said, comes along, maybe a bank or whatever, could be a way for people who are less prepared to take the leap into true DeFi or complete DeFi to have some form of safety net and some form of local governance to help them in the DeFi concept. Whereas people who feel like they're prepared to step outside that safety net will then be able to do so, accepting that you're stepping outside the regulatory blanket that gives you, say, as a retail investor, gives you protections to regulated instruments in your jurisdiction. So I think it'll be a little bit of a hybrid. There'll be a lot more hand-holding, particularly, in the US now. Banks and TradFi are getting into that space in the retail side. I think there'll be a lot more hand-holding and kind of quasi-centralization that looks a bit like DeFi. But then as the education and the knowledge base of the population moves forward, then that will allow truer DeFi for those people who are more sophisticated or more knowledgeable to be able to kind of get on board a bit more easily because there'll be a greater spotlight on it. So yeah, I think it is sort of coming back in a way, but probably not quite the way that the purists would initially like it.
That's a valid point, and just kind of following on from that, I think look, there's two elements that the regulator is concerned with. One is, I think, apparently protecting the best interests of naive investors. But the reality is that it is not exactly easy using Uniswap. It's quite challenging. You've got to have a level of understanding and sophistication to use it. So I think that creates a barrier to entry. So I think in terms of protecting retail investors, I don't think that's that much of an issue. The second one is a bit more of a hot potato, which is if you don't know who the counterparties are and you're trading, I guess, well, not anonymously, but you're trading pseudonymously with them, does that create a easier environment for the laundering of money from the process of crime, for instance? And then the reality is, I think the answer is no, because we've come a long way in terms of blockchain analytics. So I think that's a bit of a nonsense. But as kind of Chris alluded to, it's an education process, and they have to get to a point in time where they can understand it. Because don't forget, 95% of all the regulators still think Bitcoin is this crazy anonymous internet money. They just don't get it. They don't get that is the most trackable and traceable asset in the world. But once they get their head around that, and I don't know how long that's going to take, I think that should lead to different behaviors.
Yeah, makes sense. I think your barrier to entry is a good point. And I see a lot of people as they come into crypto, like people ask me all the time, like, well, what crypto would you buy if you were me? And they don't have the level of sophistication to go on and buy something. Like if you know, I tell them I just bought more DeFinity, they're not going to know how to buy DeFinity, right? They don't even have a Coinbase account. So it's like people that don't have any exposure to crypto, it's like, you know, they're limited to rails that are similar to what they're familiar with, like a Coinbase account and buying what's on Coinbase, because they don't have the level of sophistication to go on PancakeSwap or Uniswap and be able to swap into a lot of the stuff that I buy, right? So
Sure. Let's look at the way this has happened, though, in other asset classes. If you look at kind of equities and the concept of old, you know, a lot of equity purchase was done through stockbrokers, through very sort of manual and kind of behind closed door processes. So people would phone somebody up, they would then take the order away and process, etc., and come back. Look where it is now. You sort of go on to one of a myriad of platforms, maybe by your bank or by other intermediaries, and you can buy and sell stocks, take CFDs, etc., if you've got the right level of. So the fact that the opportunity is there for people to start putting at least one foot in, and the fact that banks are getting involved will probably accelerate the rate of adoption and give that air of legitimacy to a lot of people who've maybe stayed outside it so far. And you know, you're right to come straight in and, you know, almost do as we did, to go straight from the outside to playing in a DEX is quite a big jump for most people. However, if they can see a route in through some exchanges that are perceived to have a higher degree of regulation, have got simpler operating platforms, and that starts their journey, and they know that banks and regulators are giving a thumbs up to some of these big organizations, that's going to bring more people in at the top of the funnel, and that's going to drive more people into the areas that, you know, the more technically and more blockchain aware investors are starting to get into. So it's only going to be good for the industry overall and for adoption.
I wonder if you have seen any conversation around that. Like over the past 4 years, a lot of exchanges out there have gone away from allowing U.S. investors into it just for fear of the U.S. SEC coming after them like they did Coinbase. And now that the Coinbase lawsuit, not only did they lose, they then were filing an appeal, and the appeal is now being dropped, which provides some safety, I guess, for the exchanges. Have you, in your conversations with different people, seen that the exchanges might be more likely to loosen up and allow U.S. investors? For example, you know, if somebody wanted to buy a DeFinity token, for somebody new in crypto, it'd be a lot easier for them to be able to create a login exchange. But the exchange would have to allow U.S. investors, and they don't, you know, at present, many of them.
Jay, I think that the problem is fundamentally the US regulators don't mess about. You know, in the UK or Europe, you get a very unpleasant letter and you've got to go and sit down with your lawyers and have a chat. In the States, they turn up with guns. So there's obviously a fear of this. You know, people don't want to be arrested when they land in MIA. So there's a level of anxiety, and the belief in Europe is that the US authorities love nothing more than arresting non-Americans, right? And that's a perception thing. So. Okay. I think it's going to take a bit of time to change that mindset. And I think what we probably will need to see is some of the bigger guys maybe taking a bit of a view on this. So look, every single person knows the golden goose is the US, right? So they are all thinking about, how do we do this? How do we set up the ability to face those counterparties? And the reality is the only way you could really do it is to set up a ring-fence entity within the United States. I think that's probably the safest and most secure way of doing it.
Yeah, I'm curious to see if that gets a lot easier for exchanges to list in the U.S. I read some rumor that the Trump family may be in talks with Binance and funding Binance, which would be really interesting.
That'd be a surprise. Bloody hell, yeah. Absolutely, that would be a huge surprise. I would probably be willing to wager it might be one of the European, or maybe some of the exchanges in the Middle East as well, that might be the first to try and enter that market.
Yeah, I'd like to see that. I can understand why every exchange got really reluctant to allow U.S. investors during the last 4 years. Hopefully we see a reversal of that, because so much of the money is in the U.S. It allows retail to get involved. Now you're creating rails that are going to allow institutions to easily get involved in crypto in the U.S. And it seems like those rails are getting wide open. But there's a difference between working with institutional investors and retail investors. So it seems like.
Yeah, look, there isn't. Okay, so let me give you a bit of context. So there's a couple of reasons why we're seeing a lot more interest from banks. One, obviously, is because they are keen on tokenizing bonds. That's one big driver, because they want to understand the process, and whether you are trading in a secondary market, a digital bond, or Bitcoin, it's the same damn thing. It's exactly the same process. The custody of the asset, the execution, the settlement, the clearing, everything is identical. So it gets them to a level of understanding very easily. The other reason, and this is probably one of the main drivers, is client demand, and obviously by way of clients asking to trade these assets, and obviously the fact that we have a new market where the bid offer spreads are quite wide. So I can tell you this very openly, that the bank we partnered with, there's a lot of people within the private bank that are extremely keen to push ahead with our POC as soon as possible. Why? Because they want to offer it to their clients. So retail will be able to access it through those institutions, and I think that's a very big driver for their behavior right now.
Yeah, so a lot of the major banks will be able to offer it directly to their clients. So their clients can go to a trusted institution. So say someone in the US, maybe net worth a couple $1 million, instead of having to figure out crypto, maybe they run a paint business or electrical business, really don't know how to get involved in crypto, but they can go to their bank and buy some ETH, some XRP, and some Bitcoin from their bank or an institution they're already familiar with. Absolutely. Or even like if they have accounts with JP Morgan or something.
No, exactly. And look, obviously, it's going to be high net worth and ultra high net worth to begin with, but it's only going to be a matter of time when you have the scaling factor and people realize the opportunity and say, well, actually, if we offer this to everyone and that's out there, and we go and do this via some of those retail brokers, that's probably the way forward. So I can see the banks leading the charge on this, and then all the retail brokers that you currently trade your equities and FX through will then begin to offer this as well. Because if you speak to people that are brand new and very naive to the crypto market, the biggest headache they have is around custody. And again, look, I've had issues. We've had issues where a lot of the Web3 custody solutions are just not that secure. Now we're very lucky. We use Fireblocks, which is very good. We use Utila, which is phenomenal, which is institutional grade. And that is something that can be offered by institutions to those demographics of clients to give them some kind of level of comfort. Because I think I read something somewhere the other day, which is crazy, that 15 or 20% of all digital assets, effectively, people have either sadly passed away and no one knows what the PKs are, or they've forgotten their PKs. I mean, the numbers are absolutely bonkers. They really are.
I did not know that. That was wild.
Yeah, no, I'll try and dig out the reports. It's absolutely crazy. I was reading it. It's very interesting.
Yeah. So to switch it over to DMA Link and the DeFinity token, obviously you have the SEC that there's no legislation passed yet about certain types of clarity, but there is guidance, particularly from David Sachs, the cryptos are. DMA Link is doing well. They have revenues, and we'll get more on that later in the show. But because the SEC has not given that legislation has passed on guidance on what the SEC can prosecute, what the clarity is it still the plan to allow buybacks from the profits of DMA Link when the finances allow? Or is that something that you guys would hold off on until the actual legislation is passed?
No, I think the buybacks. I think we're comfortable right now with where we are. That buybacks are absolutely fine. Beyond the buybacks, yeah, I think we need to see what the actual letter of the law will say once everything's been signed off.
And as far as the actual revenues from DMA Link, the public really doesn't know. Is it okay? Like, I know they're just starting out. Is it they're netting a couple of $1,000 a month, or is it in the six figures a month? Is that something that you guys might be public with at some point?
Look, I mean, I don't get into specifics, but look, it's in the heavy six figures, and I'm hoping that within the next, I would say, 60 days, it will probably be in the seven figures. The numbers are doing well. We are growing, we are scaling, in spite of the fact that obviously we've had the healthcare issues of one of our founders over the last couple of months we've been dealing with. But notwithstanding that, yes, things are moving forward at one hell of a pace, and I think if half of the things that we're working on come to fruition, then yeah, the growth is going to be exponential, I think, over the next 2 years.
Well, I am, and you said when that growth is in the six figures, is that per quarter? Is that per year? Is that what time frame is that?
No, per month.
I am going to have one heck of a show tonight. Okay, thank you. Ray, next question.
Well, Jason Pena asks, investor question, where is DeFinity based? And if outside the U.S., are you considering the favorability of the new administration will show towards American-based companies and possibly move?
So essentially what we did was we have set up subsidiaries in the US. So if you look at the group, we have effectively the top co is DMA, that's based onshore in the UK. We have then DMA Mauritius, where our operations team is based. We have DMA Jersey, and we also have FX Group in the US, and we also have Cerberus Technologies. So they are all 100% owned by DMA. And the reason that we essentially set up the operation in the US was purely because we wanted to be able to access local banking rails. Now, in order to really benefit, I think, from, and again, Randy, you alluded to some of the tax benefits, which are absolutely phenomenal, we would have to relocate our HQ to the US. That is something I'd probably need to think about. I'm not sure when we'll be able to do that, but given the fact we could save a lot of money in tax, that's one hell of a driver, right?
Yeah, I sent you all that pertinent information. Come and get that, Brett.
Yeah, we'll see.
Look, zero tax for 10 years. That's. I mean, I don't know. I mean, that's phenomenal, right? So yeah, that's very good.
Yeah, on top of that, Trump has floated the idea that crypto is based in the U.S. He's going to push to have no capital gains taxes as American investors trade those. That would be crazy. Crazy incentive for a lot of companies to figure out what they need to do to qualify for a U.S.-based crypto, and then go that route.
That would be absolutely incredible.
Yeah, it'd be tax-free for you guys for the operating the business and the people that invest in the token, which would be absolutely nuts. Speaking of updates, is there any update with Utila? Right now, you had that was, I think, one of the most recent partners that you had announced. And then what has been going on with Kima, Facet, etc. Have there been any utilities that have been worked out with them, or is that something that is not really token driven?
Yeah, no. So if I take Utila, Chris, you can do, I guess, Facet, Kima. So basically with Utila, we basically are working with them because essentially they are extremely innovative in terms of how they see the digital asset landscape. There's a lot of stuff we're working with them to build. And one of the things that they are putting together is effectively they're going to call it, I think, the Utila network. So let's say, Randy, you're a client of ours, and you have, let's say, I don't know, 3 USDT wallets. You've got one on, let's say you've got one on Binance Smart Chain, you've got one on ETH, you've got one on Tron. Yeah. Rather than me look up each individual one, I could just have you as part of my network address book. So again, everything has been whitelisted because we're 2 counterparties that are on the same Utila network. And I just basically say Randy's wallet, and it would automatically ping to the right one, whether it was Bitcoin, whether it was Litecoin, whether it was ETH, whether it was whatever the hell you wanted it to be. So what that does is it reduces the margin for error, which is phenomenal. So again, one of the biggest headaches we have with our operations team is they will always do a test trade, wait for confirmation, and then send the balance. So they do a test rate for, I don't know, $99 and then send the balance of whatever it is, 2 million, 3 million, 5 million. Now, that obviously takes time and it's quite manual. Whereas with this, because the network addresses have already been greenlisted, you don't need to do any of that. You just basically send the full amount and it auto routes. So this is going to save a lot of time and help to really automate this entire thing. The other thing that we've also done is we've been speaking to them about, a lot of people have been approaching us saying, look, I'm not that happy with my wallet. I've had issues or security problems. And I would always kind of say, look, get a Trezor, get a Ledger. Just it's the only real way to have security or peace of mind. But failing that, they said, look, is there any way we can access Utila or Fireblocks? And I said, well, yeah, you can do, but it's expensive. So we spoke to Utila, and in fact, to be fair, they are looking to launch a product for individuals, for retail, and actually you can pay for that using the DFX token. So that's not live yet, but it will be very, very soon. So it's an interesting utility, and it will be exclusively available initially to DFX holders anyway. Only. So it'll be basically like a stripped down version of the institutional one, but it is super, super secure. And we've been beta testing it for a while. We think it's much better than Fireblocks, and we think that Utila will probably be the next Fireblocks within 5 years.
Chris, what you got on Kima and Facet?
Yeah, so there's an announcement coming out from Facet over over the weekend, basically, because also they're linked into their ION product, which is their sort of decentralized real-world asset tokenization platform. And they've had quite a lot going on, but they're now at the going live stage. So from that point of view, as a customer, our conversations were today where exchange has now had 100,000 downloads in a certain Asian jurisdiction, and they're looking to start taking in feeds sort of from us. So those partnerships are starting to come to fruition, and will start generating, and they would be a GUI and an API customer potentially through the sort of small cap business for their trading desks. There's an opportunity there for us to work with guys like that to start driving that forward. In terms of the ION and the market making side, that is also another one of the utility components of DEFX. They've strategically decided to delay another couple of months their own token generation event, just because they feel market conditions are slightly volatile for them, and they want to sort of work more on growing the community. But again, we've been working with their tech team for a long time, and they have sort of given us the agreement that they're going to be using our AMM that we sort of developed and had out there and been working on our own token. So again, the payment for that and a discount will be offered to them. And because that's a defined utility, then that sort of brings us more comfortably into the potential for a burn concept as well. So I think from that side, these guys are taking slightly longer to get going than we'd hoped, but they are now gaining traction. They are starting to generate revenues, and we're working with their marketing teams and so on as to the right point in time for the TGE. So these guys are going well, and they're starting to move forward. Again, the same with sort of Kima. They've been working on their core underlying proposition. We've still got a lot of their focus has been in the short-dated settlement. That's going well, but the project that they've got with us, which for people who don't remember, was all about the institutional settlement layer and how you can create that sort of cross-chain, cross-custodian, cross-custody platform settlement solution. That's still something that's very much in the hopper. And again, that will have a direct impact. So I think there's a lot going on the partnership side, and there's been a lot of progress. And I think maybe one of the things we can do for the community for the show as well is to work in getting more frequent updates from our partners and from our strategic partners, and start sort of plugging that into the feed so people can see what's going on with them, because that's also helps drive some of the utility components of DeFinity too.
Thank you. Right.
Sorry, guys, I was on mute. Sorry, just one final point, just on the Kima thing. The other thing to probably note here is that Kima and Utila have also partnered as well. So we're actually all working together on the same solutions as well. So there's a lot of stuff going on in the background in terms of making sure there's lots of cross fertilization of conversations and business opportunities as well. And to be fair, Utila have been fantastic. They've actually introduced clients to us. We've actually introduced quite a few clients to them. So it's been a very reciprocal relationship, a very positive one. And I'm pretty sure that we'll see exactly the same kind of relationship from Kima and also from Facet as well.
So, question on the casino and gaming front, I've seen a few articles come out about casinos in the U.S. accepting Bitcoin. I didn't see DeFinity mentioned, but it seemed like perhaps some of the partners that you guys have mentioned in the past working with them. Is there anything you can announce related to gaming in the U.S.? You had said that there's being some testing done. Is that the stage that things are at?
Yeah, no, there has. So again, look, we basically have a press release that will be coming out, I think, at some point, probably next week. We have just had to be very careful about the wording around this because, again, our involvement in this actual process, we're not involved in either holding assets on behalf of individuals or basically working on the creation of liquidity. It's just the fact that this is our repo concept rebadged. So that's kind of our involvement in this. So we should have a press release that goes into a bit more detail in terms of what's happening and the scaling of this. But again, look, we're not an active participant and we're not facing individuals in the US.
Got it.
Currently, there is, as far as liquidity goes, let's just say like on PancakeSwap, there's not a ton. Like a couple $100 might bump it up like 1 or 2%. How do you go and talk to these institutions about the discount model to your clients in order to support the DeFinity buybacks? When, I mean, it seems like they would have to hold several $100,000 worth. How do you do that with so little liquidity?
Yeah, so look, I think the problem we had is that we needed the price to be at a certain level. We needed the liquidity and the depth to be at a certain level as well before we engage with the proper institution, the hedge funds. But actually, having said that, to be fair, I've already started speaking to some of the corporates, and the feedback has been pretty positive. So we should hopefully the next week or maybe the next 10 days have our first corporate who is more than happy to have a discount, more than happy to hold the token. Their issue or their problem was they didn't have a custody solution. So we then introduced them to Utila. They've just signed up as a client. So they'll be storing those DFX tokens on Utila. So one of the issues that we face with the corporates is because they're so much less sophisticated institutions, they haven't quite got their shit together with custody. So when you then have a token like this, their head explodes and they're like, well, Jesus, we want the discount, but how do we do this? And our suggestion, of course, initially was, well, we can hold it for you. And I go again, which is great, but obviously their preference would be to do it themselves. So that first client, I think, will be quite pivotal. Now it's not going to be a monster ticket, but it doesn't matter. It just has to be the first one, because once we can evidence there's one client's already done it. The ticket may be 10K, 20K, whatever it is. It will be peanuts, but it doesn't matter. It's the principle that they'll be doing this. They'll be holding those tokens to receive the discounts. As long as they hold the tokens, they receive the discount. If they don't hold the tokens, they don't receive the discount. And
I guess building on the liquidity piece, though, I mean, we've got obviously with some of the volatility in the price and the market and everything else, we have seen the farming only really start to be utilized. So again, if we kind of look at it, the farming pools that were tapped into because of where the token price has been have been filled up. So again, as the first institutions come on, as the first corporates come on and start to buy, the price starts to move up. That then opens up new farming pools that will then create more liquidity opportunity. And what we've seen with those to date is that every time a new pool opens up, it gets filled in. So there are mechanisms in place that the initial buys will obviously help the price, to your point, maybe disproportionately because of the liquidity. But again, these customers are going to be predominantly coming through sort of the Uniswap model initially. So again, they're going to be buying in the ETH base. So although liquidity is particularly low on PancakeSwap, if we think about where that exists in the ecosystem, one of the reasons we created PancakeSwap and wrapped the token and bridged it over was to create an opportunity for smaller investors to come in and to have a lower transaction cost. PancakeSwap was never meant to be a solution for an institutional approach. Uniswap and the native token were always going to be the primary focus for the bigger tickets, and then at the right point in time to expand out further into the centralized exchanges from the MEXC approach. So that's still the strategy. The farming still there to ramp up the liquidity as the price goes up, and PancakeSwap, when we have surplus liquidity, we'll still look to support the PancakeSwap, so the smaller investors, the smaller community holders can get access to lower transaction fees. But ultimately, the bigger guys are going to be coming into the native token.
So 2 years ago, a lot of the corporate and institutional clients were very reluctant to hold the token, even if it meant a discount. But now you've seen that sentiment change, and you're about to walk your first one through the model of doing it. And once you have that, then it'll be easy to say, here's how they did it, here's what they did, now they get the discount, and you think you'll have a lot more adoption then.
Yeah, definitely. I mean, look, it was even 12 months ago when you kind of mentioned the discounts, everyone's like, amazing, how do I get it? And then you explain, they're like, shit, that's okay. But now I think they look at this and they're like, okay, cool. So what's the discount? It's remarkable. They've all done a 180. So I think they've all got to the position where, quite frankly, they've got sign-off for digital assets. And whether it is a utility token like ours or whether it's something like an Ether, I don't think that their boards really give a shit. They've just given them the green light, which is great, which means now is a poignant time to begin this process.
Yeah. Yeah, that's good news.
So there's obviously a lot to be excited about. What do you think you guys are most excited for? Whether it be the casino rollouts beyond the one casino that was announced by Bitline, do you think it's maybe other centralized exchanges over the next 12 months, or even like the hedge fund partnerships, or something other?
So look, there's what's quite interesting is that there's a lot of innovation within the gaming industry. And again, look, I was a bit naive to this entire sector before we kind of accidentally fell into it. But there's a lot of stuff that we're looking at in that sector that I think could be extremely lucrative. And I think the opportunity and the scope is absolutely colossal. So look, I think gaming is going to be a very interesting part, certainly within the utility portion of the DFX token. Now, obviously, look, clearly I'm excited about the bank model, because that's an absolute game changer. This is something that could potentially help to spike the business to $1 billion valuation. It could, get us to a point where we're doing, tens of millions of profit per month. So it's a great thing. But one of the things that I'm always a big fan of is having some kind of diversification, so a portfolio of revenue streams. Some will perform well, some will perform not so well. And as long as you have several of these, which is kind of what we have, I'm not going to pretend that every single thing we try and do is going to come off and we're going to make lots of money. It just, life's not that simple, sadly. But if half of the stuff that we do generates half of the cash flows we forecast, then this is going to be generating a shit ton of free cash very, very quickly. So I'm excited by all these things. But the biggest headache I have, or the biggest problem I have, is that just everything just takes a little bit longer than you expect. If you look at all our budgets and forecasts, we're destroying all the budgets and forecasts in terms of everything. But every single forecast we made was probably for about 3 months before we actually hit the numbers. So it's annoying that the delays are challenging. And when you're dealing with large corporations, there's always a process. There's always a lot of things you've got to go through. There's a lot of frogs you've got to kiss internally. But once you get through that process, and once you kind of pass that initial hurdle, scaling with those counterparties is very easy. So again, we do have some other announcements on a couple of hedge funds we're working with. And again, just hopefully we can just twist their arm to do the press releases and publicize what we're doing. But it will be a big deal.
Fruge, thank you. There's a Rain, you guys on?
Go ahead.
So you have multiple, not just institutions, but you have companies now that have gone over and said, hey, GameStop is announcing that they're raising an additional $1.3 billion to get Bitcoin on their balance sheet. Obviously, you guys have a ton of DeFinity on your balance sheet because that's your company. Is there anything else that you have on there as like a hedge against things? Do you have ETH? Is it Bitcoin? Something a little riskier?
So to be honest, I think the majority of our book is skewed towards USDT, USDC, ETH, and DFX. That's it at the moment. We don't have, Chris, unless I'm wrong, I haven't seen more than like $5,000 of Bitcoin. Like there's a tiny amount of Bitcoin, and look, I think the reason that we have not a huge number of assets on our balance sheet, obviously, DFX are our native token, so it makes absolute sense to own that. Stables we have just purely for immediate liquidity if needed, and ETH just again, maybe I'm old school, but I'm a huge fan of ETH, always have been, big fan of Vitalik, and I think every single bank we're speaking to. Well, don't get me wrong. I think the tech of some of the newer, better, faster third generation layer ones, like Sol, are great, but banks just ain't using them. They're all using ETH. So that's the main reason.
Good.
And also, we've always our model is a venue. So at a core, our company is a venue, and one of the attractions that brings is whether people are buying or selling, whether the market's going up or down, it's trading across the venue, which is what drives our business, generates our revenues. So again, we want to be careful that we don't see the stability and the valuation or any concerns about the business, because again, as a regulated entity, there's oversight, there's governance around the business. So we don't want to kind of cross the Rubicon as being seen as a fund or as being seen as an exchange where we have a prop position, where there could be a conflict of interest versus our clients because we hold assets. So again, if we sort of strip it right back to what we are, we're market price agnostic, and it's more about volume and transaction flow across the venue. So that will always mean that whilst we'll have small pools of liquidity and working capital, and obviously our own token, ultimately we don't want to be run the risk of being seen as a liquidity provider, because that then makes us too close to an exchange, which is clearly a flawed model and too centralized. And our solution is to provide a viable alternative to institutions that isn't an exchange. So yeah, that will probably be the way we'll stay for quite some time.
Sweet. There's I've been working with AI for a different reason, not really to do with finance. One, I think it's sentient. It's a whole other conversation, but it got me thinking about the stepping stones that it took to get there. You have like originally your personal computer, which led to the internet, leads to socials, leads to mobiles, and AI is likely the biggest wave that we've ever seen. And you've been CEO of Axion AI. How can that be used to leverage and help DeFinity Markets and the token?
I mean, look. So look, we've got a really good relationship with Axion. You know, we're not just their partners; we're also a shareholder in the business. Likewise, with just being very open, we're not just a partner of Utila; we're also a shareholder. So yeah, we have a very deep relationship with Axion. They have built all of our AI tech stack from the ground up, and it's been phenomenal. You know, it's been very powerful. So the origin of the entire thing was really we needed some way of demonstrating to banks that we had a risk engine that could help them manage risk at the point in time where their clients were trading digital assets, which is kind of where the whole anomaly detector came from. That then evolved into a couple of other things, including execution algorithms and also market making algorithms. To be fair, Chris has been slightly more involved in the distribution of that than I have, but no, the relationship is still very good, very strong, and I think it is going to be probably one of the most powerful relationships that we have as we scale, because one of the things that you have is that this is a new asset. There are levels of complexity that are much more challenging than foreign exchange, for instance, and it really, I think, can be best managed with AI. So optimizing execution algorithms, optimizing trade execution, evidencing that you've got best execution. The only way I think you can really do that is using AI, and I think we are light years ahead of quite a few of the rivals because they haven't even got here yet. Now it's kind of funny, we were too early with AI. When we were talking about AI, no one gave a shit. So we don't talk about it, but we have got some of the best, most cutting edge AI technology that exists on the planet.
I think doubling down on that is as well. I think we also have a mix. So a lot of the AI that people are talking about focusing on is obviously the LLM, the chat GPT driven models, etc. Yeah. But again, for financial institutions, an awful lot of the machine learning type, the old school AI, is where a lot of money is invested in, where a lot of money flows through, and it's the kind of tech the big regulated institutions can use because it's been around longer, it's been bench tested longer, and there is more certainty of outcome of what it delivers. So, you know, where we are seeing some interest is again, we have a market making customer that again is sort of choosing time to go onto an exchange. They're very focused on AI. When we're able to announce that they're going to be one of our, you know, and we're expecting them to actually be a lot faster than some of the other people we're talking to about using the market making. So again, another sort of part of the utility, and you know, they'll be paying us in tokens for the discount. So you know, that's superb. But talking to them, they're looking at quite a retail focused financial sector AI product and a number of agents and bots. And again, they're very keen to work with us and Axiom, given what we already have, because of the history and the length of time and the data lake that we've created from the years the AI has been running. So, you know, it's not part of the core business, but I think we're not sort of plowing on doing what we're doing. You know, even some of the areas that we've developed as kind of complementary to our core offering are being impacted, and people are approaching us around the new tech AI. So, you know, that will drive sort of new news, new awareness, new opportunity, I'm sure.
Thanks. Appreciate that. We are winding down here, but before we kind of go, we had a article come out from Alia Research about you guys. I was wondering if you guys could give us a brief overview. Are you guys just something that they had stumbled upon and they wrote it independently of you guys, or did you reach out and be like, hey, you tend to write about this stuff, this is what we're doing, and how many more plans do you have to do that, just to kind of get the brand awareness out there?
Yeah, I think that this was sort of one of the steps. You know, we've obviously worked with sort of certain influencers over the years and so on. And again, we were trying to look, a lot of institutions, a lot of corporates, you know, will not necessarily look to the influencer approach to kind of help them make their decision-making process. They're used to getting research reports. They're used to getting something where somebody gives an opinion in a piece of paper and then has a very small print at the bottom that says, oh, by the way, we may actually own some of this, or we can't guarantee that what we're saying is, you know, an up or down. But, you know, ultimately, research is something that's more institutions and asset managers expect more of. So for us, this was a step forward. And how can we spend time and talk to these people that generate these independent reports that for smaller institutions and funds, the first sort of wave of people coming on, how can we help make it easier for them to understand about the token and about the business model, not just as a user, but then also as a purchaser? So, you know, this was something, it was about us giving them time, about us giving them insight and information. And then, like all research reports, their analysts go away, they compile what they see from what we've said and what they see from the external marketplace, and then try and put it into an independent view. So, you know, hopefully this will help, you know, both institutions, and holders, community holders, people talking about the token, you know, just raising awareness and providing an independent overview of what we're about, and something that's been produced from the outside. So yeah, hopefully it will be helpful and be complementary to some of the other things that are going on.
I think so too. Ray, you got anything else before we bounce?
No, I appreciate you gentlemen joining us and going through. I know, yeah, a lot of my fans and viewers have been wondering what the latest is with DeFinity, and notice that you've been head down, working hard. So it's good to get an update on what you've been working on.
Yeah,
and I guess
I think for us going forward, you know, we've already, you know, we continue to speak to various members of the community. Some of the guys in the community have been really helpful in sort of trying to bridge the gap and sort of keep people away, because, yeah, as you say, when your head's down, sometimes you kind of forget that it's a definitely long period of time to the people out there. And, you know, for us, sort of days feel like hours, weeks feel like days, because you're at the grindstone, you're in the trenches, you're at the coalface, whatever analogy you want to use. But sometimes you do forget that for people on the outside, where they don't see all this going on, then, you know, we just need to make sure that we work at ways of increasing the frequency of communication and just letting people know that we've not all sort of fallen off a cliff somewhere. Actually, it's the fact that we're quiet is because we're working hard, but that's positive for the business, for the token, and for the progress.
Agreed. So just there's one more thing from the chat that just said, and I just for clarity, they said, so when a customer holds DeFinity, they get a discount, and they're asking the discount value is used to buy back and burn DeFinity. So obviously that's not it, but could you just be a little more specific on what the discount does for the holder? And then also, is there a certain percentage that you guys might use for buybacks based on revenue? Is it X amount of percent of the profits, or X amount of percent of X amount of trades?
Yeah, so look, with the trading discounts for holding the token, the benefit to the holder is that they will get a discount on any of the activities they partake in. So let's say they're trading electronically, they're trading OTC, whatever spreads or margins they're being charged will be reduced for them to hold those. Now, the reason that we are keen to create an ecosystem where people start doing this is we'll start off with corporates, then we'll basically push the institutions. So the objective is to have long-term holders of the token to help create a base level price for the token. In terms of the buybacks, there's actually something we're working on that's very, very innovative. I can't really get into too many details now, but it will be far more transparent in terms of there will be an actual definitive number that will be purchased and it'll be disclosed on a regular basis. So, and we've done a bit of research and we think we are the right side of the regulations to make sure that it is utilities, not security.
Yeah, and things like the ancillary kind of the peripheral products. Again, we have a lot more sort of latitude and leverage around that. So again, we can expect disproportionately compared to The main revenue models, for example, the market making side, the revenues will be smaller, but again, the proportion of that we can attribute to sort of the buybacks and the burns and so on will be greater. So it's about making sure there's that mix and just pushing everything forward. So much like our revenue streams, the utility isn't just a single element of the business. Actually, it covers and spans everything that we're doing, and therefore whatever hits first, whatever hits hardest, then will benefit the token.
Preach. Thanks, guys, so much. We'll end it here. We'll talk to you off camera for a little bit, but thank you so much for joining.
Well, thanks for having us.
Yeah, great to be on.